We intend to use our tools to keep inflation expectations anchored at 2%, which gives us the ability to do all of the things we do when the economy is weak.
It could take months, though, for the data to contradict or validate this narrative about transient inflation, and obviously investors are twitchy right now. Do you think your guidance is too vague right now to be properly understood by investors?
I'm trying to make it as clear as possible. And I went through, the guidance. I think the guidance for the tapering asset purchases has an element of judgment in it. But I've also said that we will, well in advance of any decision to consider tapering asset purchases, we'll communicate about our sense of progress towards substantial further toward the goals, substantial further progress toward our goals. So
that tip goes out to Dave Kranzler of Investment Research Dynamics, who just a few weeks ago tipped me off to this massive change in how the Federal Reserve now measures their ongoing fiat Federal Reserve note M1 currency stock. I'm going to leave a few links in the show notes so you can go look at it yourself, but just to surmise it very quickly, they're adding to the old measurement of M1 now other liquid deposits and money market deposit accounts. You can see how massive the jump is here on their Fred chart. We'll also look through a few other GoldChartsRUs Fiat Federal Reserve Note M1, 2, and 3 charts, which we often use here on this SD Bullion channel, so you can understand what is happening at least on the surface. We're going to do all this while we enjoy a few minutes of J Pal's Moon Dance Silver Squeeze music video. Enjoy.
Fair to say you simply flooded the system with money?
yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money.
The life of Pete Peterson, one of our leaders, in saying, watch out for the debt, watch out for the debt. And now we're out to trillion-dollar deficits. When do they really affect America?
Sooner rather than later.
Better get that money.
You can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money. What do? You get out. What do? I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard.
Providing liquidity is a nice way of saying it. What they're doing is they're creating inflation. They're just inflating. They're monetizing government debt, and they're buying assets with the money that they create out of thin air to enable massive U.S. government spending. In fact, the U.S. government is spending more money that the Fed prints than it collects in taxes.
$US in the system. 1 year later, that number is at $6.7 trillion. Meaning that over 40% of all U.S. dollars were printed in just the last 12 months.
Where do you put your money? What's the number one conviction trade right now for you?
Silver.
Silver?
Silver? Why not gold?
Because when you look at the relative values of silver and gold, silver today is about, let's say, 65% below its prior peak. Gold is getting very close to its prior peak.
Can it go exponential like we're seeing in some of the non-precious metals?
I think there's a high probability of that.
Hello there, on behalf of SD Bullion, this is James Anderson. Before we continue forward with this week's SD Bullion market update, do me a quick favor, hit the like button below so others who might be currently asleep at the wheel can perhaps learn this critical information as well. Another week of sell-offs in the precious metals derivative-driven spot price complex. The gold-silver ratio has climbed a bit of late, likely to close this week around 67 ounces of spot silver to theoretically get 1 ounce of spot gold. Gold spot price has tremendously sunken below its 200-day moving average. Is it possible that we're tiptoeing into a 2008-like deleveraging bankruptcy phase event? If you recall, last week we used late 1978 as an analog to try and surmise how long and how low this sell-off consolidation could go. Time will tell, of course, but if you are bullish gold bullion, given the seemingly endless fiat currency creation ongoing, now's probably a good time to be adding to your long-term positions. Silver is still hovering around its 200-day moving average, just over it by one fiat Fed note, pretty much to close the week. For silver bullion holders, the valuation downside is currently limited given the outsized demand and limited available supplies for sale at current spot price points. The U.S. government's hard debt pile pierced $28 trillion this past week. Here's a look at the hockey stick shape that is our ballooning national debt currently. Note the increasing speed at which trillions just keep getting added to this U.S. debt pile. Of course, none of this takes into account the off-balance sheet unfunded liability and promise piles accruing, which have been estimated over 100 to 200 trillion in notional value. How are we going to pay that off without defaulting and/or inventing a time machine? Fiat currency debasement coupled with yield curve control and full monetization of our own debt piles, that appears to be the go-ahead tactic, judging by our actions currently. No matter what's being spun regarding the current U.S. job market, the truth is the labor participation rate has dead cat bounced and appears to be rolling over currently. While small business revenues, the supposed job creator and leader of our U.S. economy, that's also rolling over. It's still 38% off from pre-pandemic levels. Oh, and unemployment claims, they remain stubbornly high as well, very high above the pre-COVID era level. Looking back at the last silver spot price spike to 30 an ounce just over a month of time ago, we're reminded that the CFTC is not here to regulate the commercial and foreign central banks they're beholden to. Rather, they have recently been using scare tactics to try and freeze the silver squeeze movement from buying and holding physical bullion for the long term, while also being vocal online. Earlier this week, a Bloomberg Law article chimed in by trying to scare retail silver bullion bulls. I'll leave the link to that article in the show notes. If you take the time to read the legal requirements, personally, I think there's no case against average silver squeeze bulls buying bullion and enjoying the camaraderie of others who are doing so too. This is the silver spot price chart spanning from 1970 until now in the year 2021, and it uses all the aggregate trading data outside of New York trading hours. Now, perhaps if the CFTC were doing its supposed charge, this chart would not have gone exponential in the last few years. Outside of New York trading hours, the price of silver has now aggregated above $227 an ounce over the last 5 decades plus. Now here's that same chart, and we're going to use a logarithmic format. The red line is the silver price at the start of each New York trading session, and the black line is the intra-New York trading silver price data over the 5 decades plus. It begins in 1970 at a silver price of $1.92.5 per ounce. And we're now currently at a cool 21 cents per troy ounce of silver using intra-New York trading data over 5 decades of time. Now you could report this to the CFTC if you like, but you'd literally be shouting into a void, wasting precious seconds of your time. I say this for many of you know the history. WikiLeaks published U.S. Treasury cables, which reveal that the agency, the CFTC, and its politically appointed commissioners were literally born by COMEX Gold Futures startup in 1975. In late 1974, back when U.S. Treasury was looking to dissuade U.S. citizens from saving soon-to-be legalized private gold bullion over consistently devaluing fiat Federal Reserve notes, that agency was put in charge to pretend police the market. Now, they are not some market-neutral referee, not if you look at the history. Rather, the CFTC has been doing the fiat financial powers political bidding ever since 1975. Late last week, the Wall Street Silver Reddit group launched a GoFundMe campaign to promote and market the idea of buying silver via billboard messages and other low-cost creative viral campaigns to get the word out to average savers and investors who may not know what's building. SD Bullion was pleased to donate 5,000 fiat Federal Reserve notes to the effort, and in just 7 days of time, over 112,000 in donations came through. We're going to close this week's SD Bullion market update with a few random visual proposals of what these folks are working on, and 2, we'll mix in some fire visual memes for fun as usual. On behalf of SD Bullion, have a great one, and as always, take great care of yourselves, those that you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.